Good morning. Loan comparisons for different buyers. Let's look at conventional versus FHA versus VA versus jumbo. Who's winning in 2026? And there is no best loan, only the best loan for you. And in 2026, mortgage rates are stabilizing, and underwriting is tightening selectively, and buyers are more strategic than ever. And the biggest mistake borrowers make is chasing the lowest rate instead of the right loan structure. Now, this guide compares conventional FHA, VA, and jumbo loans using real buyer profiles, practical trade-offs, and clear side-by-side comparisons, so you can choose the loan that actually wins for you. So let's look at why conventional is going to win in 2026. There's lower lifetime mortgage insurance as compared to an FHA product. And there's flexible down payment options with as little as 3%. And there's strong refinance positioning when rates drop. So let's look at a real example. A dual income household, professional household, buying a $425,000 home with good credit often benefits most from a conventional loan due to lower total interest paid over time. Now, here's some points to watch out on. Credit score sensitivity and stricter debt to income ratios. So let's look at FHA loans, accessibility over perfection. Now, who's this best for? We're thinking first-time buyers, self-employed borrowers, or credit repair scenarios. And why FHA still matters? Well, it's more forgiving credit standards than a lot of loan programs. Competitive approval odds when others decline. It's an ideal stepping stone loan, usually used by first-time home buyers. So let's look at a real example. A buyer rebuilding credit after a job change qualifies with FHA today and then refinances into a conventional loan once equity and credit improved. Here's what to watch out for. Mortgage insurance remains for the life of the loan on FHA unless it's refinanced. So let's look at VA loans, the undisputed power tool. And it's best for, and really only for, veterans, active duty service members, and eligible spouses. Why VA wins, period. There's no down payment required, no monthly mortgage insurance. There's strong appraisal protections. It's also the lowest default risk of most loans. Real example, a relocating service member preserves cash for moving and upgrades while locking in competitive terms with zero down. Here's what to watch out for. The VA eligibility and funding fee considerations. And if you have that where you can waive it, that is awesome. So let's look at jumbo loans, high income, high precision financing. And these really are best for doctors, executives, business owners, and luxury buyers. So why jumbo works in 2026? Well, they're specialized programs for high earners. And they have asset-based and bank statement options for self-employed. And they have competitive pricing with strong financials. So let's look at a real example. A physician's buying a $1.2 million home and uses a jumbo loan with the smallest down payment available, which is 10, and retaining liquidity for their investments. Here's what to watch out for. There's usually stricter documentation and reserve requirements along with those programs. So the final verdict, who wins in 2026? Well, let's look at this from a couple different ways. The lowest lifetime cost, conventional wins. The best accessibility for first-time buyers, FHA wins. The best overall value, VA wins. But the best for luxury buyers, jumbo loans. And the real winner is the borrower who matches the loan to their strategy and not the headline rate. So here's the call to action for this video. Choosing the wrong loan can cost you tens of thousands over time. And a mortgage broker compares all four options simultaneously so you don't have to guess. Wouldn't that be nice? So please give me a call or reach me at my website, billrapponline.com, and you can call me from there. Look forward to talking with you more. Have a good day.